Okay, welcome back MegaWhale team. Thanks for tuning into today's video. Today's video, we're taking a look at Bitcoin. We're going to be looking at the long term and the short term, more specifically focusing on what is actually happening right now with the price and what we can expect in either upwards or downwards directions. We're also going to be looking at the Bitcoin liquid index on the log scale. We'll be taking a look at the DXY and briefly going over the global economy in regards to the Nasdaq and the financial markets. So if you're interested in hearing about all of that, stick around to the end of the video. If you have any questions, as always, leave them down in the comments below. And remember to like, comment, subscribe, follow us on Twitter, and join our Telegram. And if you're interested in our VIP Telegram, you can contact me via the Telegram link down below. Let's get into it. So Bitcoin is still trending in this ascending channel. We've done many videos on this already, but we're going to just reiterate it again. This ascending channel is a bearish structure, guys. So an ascending channel more often than not breaks to the downside. We can classify an ascending channel with two uptrending trend lines that find support and resistance, all right? And the price is moving in a slight uptrend between these lines, but overall, there's an exhaustion of this buying pressure as time goes along, and eventually we have a breakdown below this major trend line, which is indicated as a dotted line on this chart, dropping downwards, all right? Now, our very bearish prediction, of course, we take a measured move of this entire macro structure. The measured move is from the pinnacle, so the apex or the bottom of this flagpole to the apex of the flagpole, which will be the first touch, all right, the lowest retest point of the channel. All right, we don't include wicks, all right, we're going to be taking this point here. We copy and paste that trend, so the distance, and we apply it to the initial touch point, all right, so the highest point of the channel, and bring it down. It brings to us around 14,000. If we take it to the bottom of the channel, it takes us around to 12,000, right? That's the absolute lowest prediction we'll have for Bitcoin. This is worst case scenario. That is where we think the price will go, all right? Our current prediction, we have a 200-day moving average smoothing prediction, all right? We use a 200-day moving average. We'll come back to this chart in just a second. The 200-day moving average on the daily, and we take on the weekly, and we take a rise over run of the 200-day moving average, apply it to our predicted bottom, and our predicted bottom is going to be the 14th of July minimum. That's the earliest we expect the price to bottom out, and all we need to do is take a rise over run, meaning that we take the date from today, the difference, copy and paste the difference, all right, apply it to the 200-day moving average, and then we have our expected trajectory of that 200-day moving average over the next 93 days, and that is where our target is, which lines up to 24,000, all right? So 24,000 is our initial target. Of course, I've gone over this many times, but for the new viewers to this channel, it might be interesting. So 24,000 is our minimum target for bearish scenario, and an absolute maximum target if we end up losing this 200-day moving average with that $12,000 mark, all right? But there's no need to worry about that yet. All right, guys? So we'll come back to this chart in a minute, because I do want to talk about a few things on here, but we'll go back to Bitcoin. So currently, guys, Bitcoin is, like I said, in that ascending channel, but a smaller time frame, we're seeing a few mixed signals here. Of course, if we lose this trend line, and when I say lose the trend line on a macro scale, it means if we close a daily candle below. Okay, so what we're doing now, we've broken below here, we didn't lose it. We've broken below, we didn't really lose it, right? We need the daily candle close below that trend line to lose that trend line, right? As we can see, this entire time, we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 tests of this trend line, not a single daily close. It's an incredibly strong support, right? Most people are blissfully unaware of how strong the support line is, and if we do lose the support line, we will see a significant drop in the market, all right? It is as simple as that. When you lose strong supports, you have strong drops. When you break strong resistances, you have strong moves upwards. It's as simple as that. So moving to the smaller time frame, what we're going to do first and foremost is we're going to invert the chart. And we can see it's very simple what we see here. We see this area of resistance essentially along this trend line. And we can see, again, if we just take it from a bullish perspective, it's a little bit easier sometimes. We have our deviations from our trend line, right? These are our deviations, our points of resistance, these smaller circles, deviations, points of resistance, all right? What are we seeing? Well, we're seeing an ascending wedge, all right? And an ascending wedge is generally a bearish pattern, guys. So we could definitely see something or other like this, a push upwards, all right, into here, a rejection, and then back on down. That is definitely a possibility, and it's not something that I would expect to occur, but it is something that I'm aware of as a possibility. I wouldn't be looking at this as a definitive move, but we have seen a glimpse of weakness in this channel, all right, in this ascending wedge, sorry, signifying a potential break of this trend line again would be much easier in the future. In saying that, guys, it doesn't really matter because this 42,000 to 42,500 range is a very significant resistance still. Remember, this whole area here, this candle, these few candles here got rejected from that range, and when we rejected from that range, we crashed back downwards. If we go back in the history of Bitcoin just in the last few months, we can see every time we clear that 42 to 42.5k range, we have this significant move upwards. All right, again, rejection, but we cleared over here, significant move up. All right, very large pump, very large pump, very large pump, and obviously very large pump. So this 42 to 42.5k range is that significant resistance for the move upwards. If we break that, close a daily candle above it, we expect a swing high. All right, obviously a lot more can happen when we get here. That will be the first step. We're not going to go into anything more than that today. All else we're going to say for the bullish scenario is if we do break 42.5k and close a daily candle below it, the next significant area of resistance is to get above this gray channel here, this gray zone, and then obviously the final area of resistance for us to flip fully bullish again is to break the 200-day moving average. All right, and we can see that 200-day moving average is starting to converge deeper into the $47,000 range, previously holding above 48k. Okay, guys, so let's go ahead and look at Bitcoin chart. I did want to point out a few things, something I found very interesting on the RSI again, and this is a significant piece of data too, because although, all right, keep this in mind, although we have found support at the bottom of this channel, if we go to a 3-day chart and we look at the 200-day moving average, we're underneath the 200-day moving average. All right, we do have a day and 11 hours to close. If we close below the 200-day moving average and this dotted trend line, it is almost a guarantee. I say almost because nothing in trading is certain, but there's a significantly high chance, like a 95% chance, that we continue this trend downwards. This is a very, very, very big warning sign. Every bull, every person in the market who's got a lot of money should be very worried about this right now. They're not going to tell you this is big. This is an incredibly big deal. We've seen it in the past before for Bitcoin. I want to go to a Brave New Liquid Index for this one because the other chart doesn't really have the data. But if we go ahead and look, all right, we're breaking this trend line here. The last time we broke this trend line, although it's a COVID crash, like I said before, it doesn't matter what causes the price to break through these resistances and supports. When they break these resistances and supports, they have significant moves in that direction. It doesn't matter if it's news that causes it. It doesn't matter if it's manipulation. It doesn't matter if it's economic. If it breaks these certain critical levels, the price generally has a response to that. All right. It doesn't say, oh no, it was caused by manipulation, therefore we're not going to react. It doesn't care. The price will continue in a certain direction when these levels are broken. So last time we saw that breakdown, we saw a very significant drop, 45%, guys. And I do want to bring your attention to the RSI. Every single time we break this 200-day moving average, coincidentally, guys, we're actually underneath the 34.34 on the RSI. Now, I talked a lot about the 34.34 on the RSI and how it is incredibly significant and almost perfectly accurate at predicting the bottom of significant crashes. We're not talking about mini crashes, we're talking about significant crashes. It almost perfectly predicts the bottom. For example, over here, we broke the 34.34 RSI. When we crossed back over it, it was our buy signal. The market continued upwards. Same thing over here. Crossing it down was a significant indicator we're going to crash. Stabilizing at the bottom, signifying we'll continue upwards. Same thing over here. As soon as we crashed it, as soon as we dropped that level on RSI, we actually tanked from here, 57%. Same goes for here. When we dropped that level on RSI, we crashed 50%. All right, so that level on RSI are very important. But coming back to the 200-day moving average, we can see losing a 200-day moving average again, massive crash. Even if we go further back, guys, we can see it again, losing a 200-day moving average, massive crash, multiple occasions, 1, 2, 3 big crashes. All right, so the 200-day moving average is an incredibly important data point on the chart because the 200-day moving average signifies overall trend. All right, it is a moving average that signifies overall trend, and thus it is used to signify whether a market is generally bullish or bearish. All right, and just because we're over the 200-day moving average on a 3-day chart does not make us bullish. We are under it on the 2-day to 1-day and many smaller time frames. It is just an indication on this larger period. When it's moved to a 3-day chart, we are now currently crashing below it. All right, this is significant. This is very dangerous. This is not something to be turning a blind eye to. If we do close this 1 hour, 1 day and 11-hour candle below this 200-day moving average, below this dollar trend line, guys, be very worried. Be very worried. It is simple as that. I'm not trying to scare you. I'm trying to make sure you're aware of these dangers and these risks of a market, because the last time we saw something like this, the last 2 times, we saw significant crashes. And as a technical analyst, as a market technician, all I can go off is historic price action. That is how I base my analysis of historic price action. All right. So let's take a look at the DXY. And the DXY has broken out of a 21-year long trend. All right, a 21-year long symmetrical triangle formation, and it has broken upwards. Pretty significant, guys. I don't think I need to even explain the impact of what this is. I've talked about it so many times. What does this signify? It signifies money is moving back into cash. Why is that important? Well, I'm going to try draw it out. So you have a company. All right, what does it do during bull markets? What does it do when interest rates are low? All right, so when interest rates are low, what does it do? It tries to grab, all right, debt. So we'll say D, all right? It uses debt and it takes that debt and it buys investments, all right? We'll just say I, all right? And these investments are funded from debt, all right? So interest rates are low, it likes to accumulate a lot of debt and uses a lot of debt to buy a lot of investments. So generally these investments are going to be equities, it's going to be bonds, it's going to be stocks, it's going to be cryptocurrency, it's going to be real estate, commercial real estate, all right? Risk assets most of the time, all right? A lot of risk assets. So what happens when interest rates rise, all right? Well, then the process reverses. They need to sell these investments to repay their debt, to increase their cash flows, all right? To make their company look more attractive to investors. It is as simple as that. So what do we see? We see money flowing back into cash, and thus the DXY rises. The DXY is a negative correlation to Bitcoin, meaning generally when we rise a DXY, Bitcoin goes down. And the reason why it's a negative correlation is because of exactly what I just explained, is that it's a risk asset and these generally get sold off when the dollar starts rising. It is as simple as that, guys. There's no need to overcomplicate it. Obviously, I can talk hours and hours about this, and I've done multiple 20-minute videos talking about the implications of this in a much more detail, so go ahead and go check those out. But that's probably about it for today for that one. So let's take a look at the Nasdaq. And why is the Nasdaq important? Well, just like I said, just as Bitcoin, just as risk assets, Nasdaq is a stock. So it's going to signify obviously the top 100 index, and it's going to signify, it's a very strong predictor of global economic strength, right? When it comes to the stock market and when it comes to what people are buying and ECT. So it is quite significant what we're seeing on this chart. I'm not gonna brush it off. It isn't as bad as a position as Bitcoin right now, in the sense that Bitcoin is losing that 200-day moving average on a 3-day, where the Nasdaq isn't quite doing that. But what we have seen is we've seen a double top formation over here. We've seen a double rejection from the 100-day moving average, and now we're seeing this candle come awfully low to this level here. And if we lose this previous low at around 13,000, we can expect a drop into this 12,500 range. And of course, that would have repercussions on the entire market. Obviously, a lot of assets will be falling. If we take a look at stuff like Netflix, we take a look at Netflix. Look at this, guys. It is down like, all right, that looks like an absolute rug pull, doesn't it? All right, look at this. And people will say the economy is strong. The economy is not strong, guys. We're in a very bad position here, 69%. PayPal. All right, and I talked about PayPal months and months ago before it crashed. Here's a prime example, all right? We've got a nice little bounce on that one, but we can see it is down a significant amount, all right? Let's take a look, 72%, right? These are blue chip stocks. These are huge stocks that are meant to be safe. All right. Why are they crashing so much? It's very, very simple. And I don't want to go off tangent too much in this video because I've talked about this many times. But the money that the government has been printing to pump these markets are finally returning. And I'll say it just in this video today. People love this, but they don't understand the implications of what it means for the government to be using debt to purchase things or funding economic growth, more or less, with debt. When you fund economic growth with debt, who pays back the interest on the loans? So you have a lender which lends money, all right, to the government, all right, and then they accumulate debt. So they accumulate debt, all right. This is their debt there, all right. Usually what happens is a taxpayer's money, taxpayers' funding will go to pay off debt, all right. The government still owes that money to the lender, all right. So they print the money, they give that money back to the lender, the debt is still in circulation. In turn, you have more money in supply, and guess what happens? This debt is now worth more. The taxpayer has less buying power because there's more money in supply, and therefore, when they're paying for this debt, they're not only paying for the initial principal, but they're paying for the principal plus the interest in the later period. All right, so when you think the government is funding the economy with debt, essentially what they're doing right now is they're funding the economy with inflation. All right, it's very, very confusing, but they're funding the economy with inflation. They're purposely reducing your buying power. They're making taxpayers, making your money worth less, and then they're using your money to pay off the debt they're accumulated in later periods. All right, so it's a very significant thing that's going on right now. They've got themselves into a puddle or a ditch they really can't dig themselves out of. It's too far gone. There's too much debt. It's going to take a significant change to really kick it in motion. And I've talked a lot about how the federal budgets in the USA are indicating anything but a movement in the right direction of increased funding, increased printing, although interest rates are rising. We're heading to a place of stagflation, and as simple as that. All right. So I hope today's video was helpful. I did talk about a lot of stuff. Going back to Bitcoin, just to reiterate anything, and I hope everyone's still sticking around to the end of the video just to find out or just to clear up everything. For now, guys, bearish. Everything's bearish. Macro is bearish. All right. Short term. Looks like it's got a little bit more potential. I'm not going to say it does have a lot of potential, but you shouldn't care anyway until it gets over 42,500 and closes a daily candle. Anything below 42,500, it doesn't matter. It does not matter. Forget about trading these chops. All right, look at this price action, guys. Look at this. All right, forget about trading that. If you're not a seasoned trader, you are going to get wrecked. All right, it's as simple as that. Your mission right now as an investor, as a new person in a space, maybe you've got 2 or 3 years experience, maybe you've got 4 years of experience, maybe you're profitable, maybe you're not. But your mission right now is not to be making a shitload of money. Your mission right now is to be preserving your capital, scalp trading on good risk trades, making a little bit of profit, but more or less playing very conservative. Wait for the move to occur, then jump on, all right? Wait for the move to occur, wait for the confirmation, then jump on the train. Right now, betting on this market in a downtrend, you're more often than not going to be wrong. It's as simple as that. All right, guys, stay safe. Remember, VIP links in the description, and I'll catch you in the next one.